Hello subscriber, welcome to my YouTube channel Knowledge VDS. Today we are discussing the corporate accounting and financial management lesson 1 topic types of account and concept of debit and credit. This video will give you a idea about the different types of account and how we will going to consider the concept of debit and credit. Let's go ahead to understand the same. First of all, we'll talk about the concept of account with reference to the debit and credit. An account is defined as summarized record of transactions related to a person or thing. For example, when the business deal with the customer and suppliers, the customer and suppliers will each be a separate account. So, in the concept of account, we need to understand what is account. Account is something which we need to be understand when we are dealing with the business. There may be some parties will be occur, or there may be some parties which has their existence with reference to the buying and selling of goods. So in that case, when a seller sell goods to their customer, the customer is an account, the supplier, the seller is also an account. So we need to understand this concept of account. Then with reference to this account, let's go ahead to discuss about how the account is also related to the thing. Account, why it is related to the thing? Because the things can be tangible or intangible in nature. For example, land, building, equipment, brand value, trademarks are some of the things. But when you are going to segregate these examples, you will find some has their own physical existence, some has no physical existence. Like trademarks, copyright, goodwill, these are the things which has no physical existence. So that's why they are called as intangible. But when you think about the physical existence, anything which you can have, feel or touch, that we can call as a tangible. When a business transaction happens, one has to identify the account that will be affected by it and then apply the rules to decide its accounting treatment. Now we'll proceed further to discuss about the different types of account and what will be the different entry for the same type of account, or according to the different nature of account, what will be the mode of entry to be made in the books of account. Typically, an account is expressed as a statement in the form of English letter T. It has two sides. The left-hand side is called as the debit side and the right-hand side is called as the credit side. The debit is denoted as DR and the credit as denoted as CR. The convention is to write the debit and credit levels on both the side. As shown below, you can see that the debit can be recorded in the left side and the credit can be recorded in the right side. Let's go ahead to understand more detail about the account. So when you talk about the types of account, there is two types of account. One is your personal account, another is your impersonal account. Again, personal account is divided into natural personal account, artificial personal account, representative personal account. And impersonal account divided into real account and nominal account. Again, the real account is divided into tangible and intangible. Let's talk about some of the example of personal and impersonal. So anything which is related to the persons or any things which has a life related to the individuality or some or somehow the group of people or people are involved in that type of account will be called as a personal account. Let's understand what is natural personal account, like you and me. So are called natural personal account, like Mr. X, Mr. Y, Mr. Z, Mr. Alex, Mr. Anything can be considered to be as a natural personal account if it is denoted to the persons. Artificial personal account, that means like some of the company, Tata Group, Bajaj Group, Reliance Industries. So they are called as a artificial personal account. It represents some of the persons. And representative personal account, the example can be share capital account, debenture capital account, preference capital account. They are called to be represent because it represents some of the individual, the shareholders. So that's why share capital account. Let's talk about the impersonal, real and nominal. Real anything, here the term called as a thing. The things which has a physical existence that we call as a tangible. The things which has a non-physical existence that we call as a intangible. Like goodwill, copyright, patent, trademarks, these are the example of intangible. Like furniture, fixture, fittings, computer, all are called as a tangible account. Nominal account, anything which is required to be run the business with the its necessity to the from the operating point of view. That can be expenses, that can be income. So what are the basic golden rule of accounting? The basic golden rule of accounting in the case of personal account, debit the receiver or who owes business, credit the giver or the business owner. Means the person, if there is a transaction, Mr. A paid 1,000 rupees to Mr. B. So who is the receiver? B is the receiver. So B account to be debited, and who is the giver? A is the giver. A account will be credited. So this is the golden rule. Always you have to remember, because this golden, why we called it as a golden rule? Because without this rule, we cannot make an accounting entry. So for that purpose, we called it as a golden rule. Real account, debit what comes into business, credit what goes out of business. For example, you have purchased a machine by paying cash. So real account, machinery is a real account. Cash is also a real account. How come? Cash has a physical existence. So debit what comes in? So machinery is coming to you. Credit what goes out? Cash is going out. So that's why machinery account debit to cash account. Nominal account, debit all expenses and losses, credit all incomes and gains. Suppose for example, you have paid salary. So salary is an expenses. So salary account debited to, if you are paying in the cash account, or if you are paying in the check, the bank account. The accounting process. So there is a different approach of accounting process. The first approach is your British approach or traditional approach. When one identifies the account that is getting affected by a transactions and type of that account, the next step is to apply the rules to decide whether the accounting treatment is to be debited or credited from that account. The golden rules will guide us whether the account is to be debited or credited, as we discussed the previous. So you see that how the different account will be given different treatment for the same. From the American approach or accounting equation approach point of view, assets is equal to liabilities plus owner's equity. Or in simplified, A is equal to L plus P, or P is equal to A minus L. So where A is equal to assets, L is equal to liabilities, P is equal to capital, or simply liability is equal to assets minus owner's equity. Thank you guys. Keep watching the video. Subscribe to my channel. Thank you.